students. Today we will do question number 1 of GOEL and GOEL based upon our previous discussion. The question number 1 run as follows. X and Y are partners sharing profits in the ratio of 2:1. The undermentioned trial balance was extracted from their books as at 31st March 2019. Debit balance and credit balances are given. X capital 3,20,000, Y's capital 2,40,000, X drawings 40,000, Y's drawings 32,000. Stock as on 1st April 2016 45,200. Purchases and sales are given 8,68,000 and 12,45,000. Debtors and creditors 1,52,000, 48,000. Buildings 6 lakh. Cash in hand 5,900. Bank overdraft 27,500. Salaries to the staff 74,700. Rent 26,400. Advertising expenditure 5,000. Traveling expenses 31,300. And total of both the columns of debit and credit is 18,80,500. You are required to prepare the profit and loss account and profit and loss appropriation account for the year ended 31st March 2019 and a balance sheet as at on that date. The following adjustments are to be made. Number 1, the value of stock on March 31st 2019 was rupees 64,000. Charge depreciation on buildings at 10%. Provide for outstanding rent rupees 2,400. Partners are entitled to interest on capital at the rate of 5% and X is entitled to a salary of rupees 48,000 per annum. So you see the students that the fourth number adjustment is related with our profit and loss appropriation account, or we can say that what we have discussed based upon our discussion, the fourth number adjustment, otherwise what has been mentioned above, we have already done that. So first of all, we have to prepare the trading and P&L account. So to opening stock in trading account 45,200, to purchases 8,68,000, by sales is given 12,45,000, by closing stock 64,000. You are familiar with this, that how the trading and P&L account is to be prepared. So the credit side exits and there will be a gross profit of 3,95,800 which will be transferred towards the profit and loss account credit side. By gross profit brought down 3,95,800. Now the debit side, to salaries to the staff rupees 74,700, to rent 26,400. You see, regarding rent and adjustment is there, an outstanding rent of rupees 2,400 has been given, so that will be added. In the outer column 28,800 is to be mentioned. To advertisement expenses 5,000, traveling expenses 31,300. To depreciation on building, you see the depreciation, the value of the building is given rupees 6 lakh. So at the rate of 10%, the depreciation will come out rupees 60,000. And the balancing figure net profit will be 1,96,000, which will be transferred towards the profit and loss appropriation account as we have discussed. So by profit and loss 1,96,000, then interest on capital account debited to profit and interest on capital account debited to partners capital account. That entry we have discussed. And then transfer entry, the profit and loss appropriation account debited to interest on capital. This transfer entry will appear here. So to interest on capital, X rupees 16,000, whatever rate is given at the rate of 5%, you see at 3,20,000, at the rate of 5% it will come out rupees 16,000. And for Y, the capital is 2,40,000, at the rate of 5% it will come 12,000. So combinedly 28,000. To salary to X as given in the point number 4, that's X is entitled to a salary of rupees 48,000 per annum, so 48,000. Rest of the profit of rupees 1,20,000 is to be distributed among the partners in the ratio of 2:1. So X and Y will distribute it in 80,000 and 40,000. Now this thing is to be mentioned there in the partners capital accounts also. In partners capital accounts, first of all, we have to mention the balances by balance brought down as given 3,20,000 and 2,40,000. By interest on capital, as we have discussed, that the first entry is expenses account debited or interest on capital account debited to partners capital account or current accounts. Then another entry, transfer entry, that is profit and loss appropriation account debited to interest on capital account, that we have already discussed in the profit and loss appropriation part. So here by interest on capital will be posted here 16,000 and 12,000, and by salary for X only 48,000. Y is not getting any salary. Then profit as distributed among the partners, whatever profit, the remaining profit or residual profit of the profit and loss appropriation account, 80,000 and 40,000 by profit and loss appropriation account. Then as given in the trial balance, to drawings 40,000 and 32,000, and to balance carried down, after balancing it, you will get 4,24,000 for X and 2,60,000 for Y. Now the balance sheet is to be prepared. As given in the trial balance, cash in hand, asset side 5,900, debtors 1,52,000, closing stock 64,000, then building 6 lakh minus depreciation is to be deducted 60,000, in the outer column 5,40,000, and the asset side total will be 7,61,900. The same case is there in the liability side. You see the outstanding rent over rupees 2,400 is to be mentioned. Then creditors as given in the trial balance 48,000. Bank overdraft as given in the trial balance 2,75,000. And whatever balances we have arrived on in the partner's capital account, X and Y will appear 4,24,000 and 2,60,000, combinedly 6,84,000 in the outer column, and the grand total will be 7,61,900. So that's all for today.